Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Monday, November the 15th, 2010, and like we do every night, it's time to look at the markets, so check it out. Okay, we're going to start off looking at the Dow Jones Industrial Average. This market's going to confuse a lot of people, so let me try to break this down for you. First off, today's activity. Note the candlestick formation. It's a shooting star or inverted hammer depending on where it's seen on the chart, whether the top of the pattern or the bottom of the pattern. We'll get into that in a minute. First off, it's a bearish signal, but it's not going to actually behave the way most people are thinking. First off, bulls today would have got in today thinking, aha, here's our bounce and our big rally up to the upside, and then they had a sell-off at the end of the day. Almost all your averages in the U.S. were closed down except for the Dow Jones, which gained a total of 9 points for the day. So it would have been confusing to a lot of people who don't know any better. They would say, oh man, I was wrong. I should have been a bear, not a bull. And bears at the same time might be getting overly giddy and saying, hey, this is awesome. Here comes our great sell-off. Look, there's still potential for a major bounce here. Let me show you why I know that. First off, note the slow stotch. You got to pull back the low point here and then a lower low here. All right, this is showing a downtrend right there. Okay. Now the corresponding low points on the chart today, and this one back here, all right, is still showing an uptrend. This is a divergence, but it's a certain type of divergence. This is known as a bear setup. What happens here is you get this price activity refuses to sell off while the slow stotch continues to do so. What's going to end up happening is you get the bounce. The bounce is still coming, guys. All right, so that bounce is where the bear setup says you're supposed to short. You're not supposed to short now just because the divergence is there. You're supposed to wait for the bounce. That's another way you know a bounce is still coming, okay? So ultimately, I would not be a bull in this market. I would still see a bounce coming, but I would short that bounce. And we're going to get into more details here in a minute, but ultimately, don't be too quick to count bulls out at this moment. It doesn't have to happen today. I mean tomorrow or the next day, but I still see a bounce coming here. Okay, here we are looking at the S&P 500. You got the same condition right there, okay, but it's after a few days of selling, so it's not the same thing as seen at the very top of the pattern, not as bearish. And you note the low point here, lower low here, forming that bear setup as the corresponding low points on the chart are still trending up. That tells you to look for a bounce to the upside in the future, near-term future, and when that happens, then you short, okay? But don't count that. I mean, don't look at today's activity as being the failure of the bounce. There's still a bounce coming. Okay, here we are looking at the S&P, I'm sorry, the Nasdaq. You can see we have the major run up here, sell off for the past week, low points of the slow stotch showing that momentum, that's what the slow stotch is telling you. Momentum to the downside is increasing. That's what those lower lows are telling you, all right? Price activity in the same time period is still trending higher. Low points, all right? This is false, but it can still maintain this for a bit as the video on our website points out. If you don't know what a bearish setup is, it basically draws out like this, and then you look for a bounce before you short, okay? So we can look for a bounce and then short it. I still think it's very important to draw this comparison out right now, so I'm going to do it again. Note this major move you're having here in the Nasdaq, okay? But note all the gaps in it, low volume gaps. There's like 1, 2, 3, 4, 5, 6, 7, 8, 9 that have not been filled yet. You've got 10, 11, there's another one back here you can't even see yet. But in any event, whenever you get this condition, it's a major peaking signal for the overall market. It should be noted to be on the safe side. I would be short or out of stocks altogether. If you're long, you're taking high risk in the situation. Even though there's a bounce still coming, it's a high risk situation. So I would not be doing that. I want to show you now, compare it to the 2007 crash. Okay, here is the NASDAQ chart from 2007, that big major peak we formed. Note the low volume rally. Note all the gaps in play. It's always a telltale sign of a fake rally, all right, and a major peak it's forming. It's always shown up the same way. You notice in this case you had 8. We have more than that now, but back here we had 8 unfilled gaps before she rolled over and started filling them. She filled this one before she bounced back to the upside and then actually peaked. Note here, low point of the slow stotch, lower low of the slow stotch trending down, corresponding low points here and here trending up, forming that bear setup. And then notice how it bounced, and that's when you short right there. Okay, that's what we're seeing right now in the overall markets. It's identical. I would definitely treat it exactly the same way. Anticipate a bounce in the overall markets, still to come, but don't use it as justification to be a bull. It's actually a fake. It's a lot of bulls out there going to say, haha, this is the actual rally we've been looking for, so forth and so on, but it's actually a fake and you want to short it. Okay, over the weekend, we told you we'd update our website at perfectstockalert.com, 100% free service. All we ask in return, please refer a friend. And we've made some of those updates. We haven't actually completed all of them. First off, we did install a perfect bookstore. Right here, we teamed up with Amazon.com. You can check out right there. There's all kinds of good books on investing and trading, the top books right there. And there's no markup whatsoever. You're buying from Amazon.com. We just have them listed right here for you to peruse those. Pretty cool, pretty easy. Also, we updated the video chart school. Back here, it used to be a heck of a job navigating that. Now, one click and you can see videos showing head and shoulders pattern. You can see inverse head and shoulders pattern. You name it, it's out there. And we're always adding to it as well. So it's constantly growing, but it's really good tutorial videos for you, and it's very helpful. Over here, we've got the same stuff we had before, but we also have the trading course here. The trading course today is the 15th, so anybody who registers for next month gets the rest of this month for free. That's pretty cool. And this is the only section of our site that actually costs anything. But you see right here, we've got 1,800 people on there right now. Okay, this is because you guys are referring your friends and sharing our videos online. We've said before it costs us thousands of dollars to provide this service to you guys for free. We don't mind doing it as long as we're growing. We are growing, and so to be true to my word and to make sure that we move towards a 100% free website, this right here is now half the cost that it used to be. It's dirt cheap now. It's almost free. So in time, as we keep growing, before long, this probably will be free. So keep that in mind as well. That's about it. Don't have much more to say. Traders Forum, join us every night. We got all kinds of really smart investors and traders in there. It's all free and a lot of good, happy stuff going on there. We're looking for bullish or bearish setups. As long as it makes sense from a technical perspective, we're sharing with each other, okay? Pretty cool, pretty simple. A quick look at our disclaimer. The disclaimer, read it and weep. God bless, take care, thank you for all your support.